This video is sponsored by PelucidFX.com.
Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, let's take a look at the gold market again. As we have discussed, guys, in the weekly research, the situation on the daily time frame is really tricky, and mostly due to the pattern that was the reaction on the speech of the St. Louis Federal Reserve Bank President Mr. Bullard, who said that Fed Reserve could return back to the discussion of the potential contraction of the quantitative easing program in October, and that has led really to the significant plunge down after the initial reaction on the continuation of the quantitative easing program. It's right here. So you can see, and particularly due to this action, we have got the bearish pattern, potentially bearish pattern, the stop grabber, that has the minimum target, theoretical minimum target, is right here, taken out of these lows. Since our larger scale picture, just take a look at it, suggests the possible appearing of the reverse head and shoulders pattern here, and you can see that market now stands in fact at the bullish edge, because that is the area where the right shoulder of this pattern should be formed, has to be formed. And if market will continue move lower and will erase this, will extend this shoulder to the downside, that really could skew the shape of this pattern and really could lead to the some maybe even destruction of this pattern. Well, at the same time, the minimum target of the stop grabber taken out of these lows, if it will not lead to some significant continuation, well, maybe market could reach, for instance, even a bit lower level, that is acceptable. But the danger is that market stands at the weekly and monthly pivot support 1 and the 50% support, and we do not want to see the too significant continuation down, because it will be not very good for bullish scenario. So majorly speaking, the market should hold somewhere between the 618 major 618 support 1277 area and 50% support, weekly pivot support 113 over 6, somewhere in this area. So the optimal scenario, the best scenario for bulls will be if market just slightly penetrate these lows, or just the grabbing stops below it and returns right back. In this case, the intrigue for possible upward action will hold, and market still will be able to return back to the forming of the reverse head and shoulders pattern. If market will fail to hold above the 618 measure 618 area and continue move lower, well, that probably will lead to some deeper move. In this case, we will not be able to speak about this. So that's why this level is very important, and appearing of this bearish stop grabber is the complication factor that's in fact not very welcome here from the bullish perspective. That's why from the theoretical point of view, we could start to think about some long position in the case of either when the market will take this low and complete this stop grabber, or if market will move above this high and will erase this stop grabber. And this is also important in the short term, since we also suggest that market could form here the butterfly. So if, for instance, markets will remain here above these lows and the initial swing of the butterfly will survive, will hold, stop grabber also the pattern, it also could fail theoretically. Well, that's why we also can't just exclude this possibility. And if market will hold somewhere inside of this swing, in this case market could form the butterfly here. That's why we also were unpleasantly surprised by this stop grabber on Friday, because it just could break this scenario, could break this possibility for this butterfly to the upside. Well, that's why we should keep a close eye on this level. Well, I do not know whether you would like to enter currently or wait for some more confirmation, but if you still would like to take the long position, you should at least to wait for some signs of possible reversal on the intraday charts. And that's why we said that here we should keep an eye on the 768 support from that most recent swing, because that is very typical level for a butterflies where the right wing could start. That's why this level is significant. And that's at least this, in fact, the latest, the final level that we could watch for on the road to the downside. If market will fail here, as you can see a bit later, then probably we will have to wait when the stamp grabber will be completed, and we will see some other continuation, some other signs, clues that market could give us. In fact, we will, in this case, we will not have any choice. Well, on the 4-hour time frame chart, the situation doesn't look very hopeful for bulls, because we have this downward action. Market is forming some sort of the bearish pennant here that suggests some at least minor continuation to the downside. At minimum minor continuation, but in general this could lead really to a significant move right to the target of the stamp grabber pattern. But still, as we have some even small chances, and if you really would like to take the long position, here is the moment that you could keep an eye on within the today's trading session. That is hourly chart of the gold. That is our 768, in fact the final fortress for the bulls. Here market in fact could form some kind of the butterfly buy. That will be the chance, because this will be the pattern, and you could stick with this pattern because it could give you the chance to take the position and minimize your risk. So if you even will not be right and market really will continue move lower, you have the probability on your side that some, at least minor bounce will happen as a respect of this area. So market could probably, when it will complete the butterfly, will show some small retracement that will let you to move your stop to the break even and protect your position. And if market will not start move to the upside, right to the failure point of the stop grabber, if this will not happen, market will turn to the downside. That will protect your position. You could exit dry from this water. Well, that's why this pattern is significant for the short-term perspective. But the safest way, as I said, this is a really risky way to act today, because this is, in fact, you will try to take position against the daily pattern. That it's not, as you can say, as you can understand, the probability will not be on your side. This is just if you count on some surprise on the market and some really surprising action that sub grabber on daily could fail, market will really turn to the upside from this level. The probabilities exist, but as I said, it will not be on your side in this case. But still, let's discuss this possibility. So market, you can see now, is starting to move to the downside. This is logical because that is the continuation pattern, some sort of the wedge or pennant to the downside. So here we could get the butterfly that has the target. It's 127, 1618, right around the 786 support area. From that, move to the upside. That's support area where the right wing could take the chance of it to appear to start to the upside. Well, this is really a pain or gain scenario. So if you will right, you will get just a perfect point to the entry, since if market will start to form the butterfly to the upside, you will take the position right at the minimum. But if you will be wrong, in this case, market will show probably the significant plunge down and will erase this position. That's why it's better to stick at least with the butterfly than to just enter in just in the free space, in nowhere. So let's keep an eye on this scenario and wait when the market will hit these levels. Then we will take a look what will happen. But guys, if market will show some sort of that sort of action, this candle to the downside right through these areas, of course this we should not take any position. That will just mean that probably market will continue move lower. We need some kind of the gradual action, something of that sort of action, choppy action to the downside, gradual. In this case, we probably could get our chance that market will show at minimum some bounce with respect to this pattern. So that's the only scenario that I see on the gold market. But as I said, that's risky, and safest way suggest to expectation when the market will be done with this stop grabber, either taken out of these lows, or if it will turn to the upside and will erase this pattern. Safer way will be just to enter on some retracement if this will happen, because stop grabber for instance, could not stop just by these lows. This downward continuation could fall. That's why, as I said, it's better to deal with this butterfly. If it will fail, then probably just do nothing and wait what will happen next. So that's my current view on the gold market. Let's see what market will show us within the today trading session.